Everybody is laser focused on gold, on silver, on oil, and that gives us a chance to look at a market that nobody's paying attention to right now: uranium. Uranium miners have been a huge disappointment in the past month. In today's video, we're going to talk about what are the fundamentals. Newsflash, they're good. Nothing has changed. What do the charts look like? Newsflash, they don't look good. And that will be, in my opinion, one of the best buying opportunities for one of the biggest profit opportunities in this commodity super cycle. I also going to reveal to you one uranium stock that I really like and what the price zone could be for an entry point. And I'm going to give you the two real reasons why the uranium miners are not moving right now. One of them has to do with Wall Street and the hedge funds. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. Let's start with some quick housekeeping, real quick. We're going to start a new show tomorrow that's going to air every Wednesday. Same format, so we would like to get you in and out in around 15 to 20 minutes. The focus is going to be on dividend stocks. The name is going to be Hot Dividend Winners, and I'm going to reveal to you my dividend strategy, which is quite different than the dividend strategy of most people. I think it's massively superior. And if you've watched this channel for a while and you've been in Petrobras or if you've been in Ecopetrol, then you know what I'm talking about, because not only did you receive very juicy dividends already, you also had massive gains in the stocks. And that's what my dividend strategy and what Hot Dividend Winners, our new show, is going to be all about. It's going to be about high yield dividend stocks. I'm not even looking at any dividends under 5%, with very few exceptions. And also, these companies need to come from a sector that I want to be invested in, that has strong fundamentals long term, and where the stock therefore offers us additional high gain potential, so we can profit twice. And again, if you've been in Petrobras, if you've been in Ecopetrol, you know exactly what I'm talking about. That show starting tomorrow. Second news item real quick, our VIP newsletter. It's free. If you haven't signed up yet, link is in the comments. We're not going to spam you. You're going to get 1 to 2 videos. I'm probably going to do 2 videos over the summer, because we're going to have these historic buying opportunities in this commodity super cycle coming up, and I want to keep you informed. In this newsletter, I'm going to do videos that just either the content doesn't really fit the daily show because it's more in depth, it's more strategic, it's more market psychology, or it is smaller niche topics that are really interesting, but again, don't really fit the main show. So you can sign up for free. Link is in the comments. Let's get to it. This is the chart of the URA. It's the biggest uranium ETF. It's not, I've said this before, there's a big footnote with the URA. It's not the best uranium ETF, especially if you just want the mining stocks, because Oklo, the SMR company, is highly weighted here in the URA, and it also holds a big position in this broad physical uranium trust. So it's uranium, it's not all uranium miners, but it's by far the biggest. And second, it is the most popular. It's the benchmark. It's the ETF that everybody gravitates to. If they want to look at uranium and say, hey, is uranium doing anything? They're looking at the URA. As we can see, the URA really has gone sideways. The uranium stocks have done nothing for the past half year, more or less, and have been super disappointing in the past month, plural, especially considering the jump in the oil price, the jump in the solar stocks, so clean energy, and obviously the announcements of the big AI companies about their massive investments in the data centers, but it had zero effect on the uranium stocks. And understandably, uranium investors are getting more and more frustrated. A lot of them more and more are throwing in the towel. So let's take a look at it. While nobody's paying attention to uranium, because that's what we do at Hot Trades of the Day, we're going to look at the sectors where nobody's looking to get ahead of the market. And if you're new to the channel, hit the subscribe button so you don't miss any of the videos. It might help you out. It definitely helps us out. That's all I'm asking for. I'm not asking for writing 10 minutes, a comment that's super nice. I really appreciate that. I really appreciate that. I'm not even asking for clicking the like button, just 2 seconds. Click, subscribe button. That really helps us out. And I believe, and the channel growth shows a lot of people believe, it will help you out. Because again, we talk about the things that the majority of the market is not talking about yet. And that, one of the reasons, one of the factors is uranium. Nobody's talking about uranium. So what has happened? Well, the reason why nobody's talking about it is really nothing has happened. So on the news flow side, nothing has happened in the past weeks. If there's anything that has happened, it was actually positive for uranium. So Kazatomprom, the big Kazakh uranium producer, the biggest uranium producer in the world, kind of reconfirming they have their production problems. Doesn't really matter for the Western uranium market anymore. That's more of a China story. But it definitely shows they're already very, very tight uranium supply. It's not getting better anytime soon. And then we have the development of the uranium price. And that's how we're going to start. And we're going to flip to the spot price so you see what's going on there. Here we go. This is the spot price since 2022. And the most important number to look at is obviously on the far right, the spot price for uranium for May, $84. Now, a year ago, we were at 71.55. We could only dream about 84. But it is the lowest price in 2026. It's a decline of about $10 to the high, really the multi-year high, going all the way back to January, February 2024. Here you can see where it briefly touched 100 and then 95 in February. And then this January, 94, that was the highest level since then. So 2-year high, but we couldn't defend it. The uranium price has declined by $10. Again, that is kind of the missing positive news flow, right? It takes excitement out of the uranium stocks. But if we look at 84.18, where we were in May, and let's compare this to 2022, and we see, man, it's almost a double. The uranium spot price has almost doubled. Again, last year, we were at 71.55. So it's up almost 20%. But the uranium stocks have done nothing. Why is this? So, the uranium market is very much the most momentum-driven market in the commodity sector. It's small. It has heavy retail influence. Retail is influenced by news flow. They're also influenced by momentum. They're not patient investors. Uranium, if you look at uranium stocks, and we're going to do this in the video over the weekend for the newsletter, clever advertisement right here. Sign up in the link in the comments. It's free. I'm going to show you the unique patterns that the uranium stocks have and that you just need to be aware of to understand how this goes. So what happens is the uranium sector gets hot. Now all the retail jumps on it. Now all the hedge funds jump on it. Now all the institutions jump on it. But they're just in it for the quick trade. So once it cools off, everybody's leaving. And that's exactly what we're seeing right now. we have not had bad news fundamentally at all. As you can see here with the spot price, which again is 20% higher almost than it was a year ago, but not good enough. So the fundamentals have been neutral to good, but not great and not a breakthrough. And the uranium stocks have gone down. Let me switch back to the charts. That is the opportunity, right? The uranium mining stocks are going down, but the fundamentals have been the same and have actually been improving year over year, as we've seen with the spot price. And again, no bad news fundamentally, rather positive news on the supply side with the Kazatomprom and their problems with the uranium production, and the demand side with the AI companies confirming during their quarterly conference calls, confirming the investments in AI data centers and the massive build up there. Now, here's the part that becomes interesting. The hedge funds and institutions have pretty much left the uranium sector, and that's why it's not moving much, and started to play the AI data center story through copper. And this is very important to understand. Their thought process is, again, uranium stocks go in waves. If they're not hot right now, we don't need to be invested in it. We have a fairly similar story as far as the supply deficit in copper and in uranium. They're not comparable apples to apples, but it's kind of the same fruit group, right? It's like oranges and lemons, or lemons and lime. Meaning, supplies deficit rapidly growing, made in America story super important, crucial for the energy story. Different way. Uranium is energy supply, copper is energy transfer, and no new big copper projects in the West coming online anytime soon. So what they're thinking is, wait a minute, I can get basically the same fundamentals on copper without any Fukushima nuclear disaster risk that uranium has. And this is important for the big players. I have a lot more blue chip copper companies that I can invest in, that I can rotate in and out, that I can trade more liquid than I have uranium companies. So because of that, they love the copper story. And that's the narrative that they put out on Wall Street. And that obviously has caught on as wildfire, because guess what? All of Wall Street loves this setup. So they're all switched over to copper. Right? The only institutions that are left in uranium right now are uranium specialized investors. And then we have the retail investor, and they're frustrated. There's no news. Oklo is not moving. The uranium stocks are not moving. Why haven't I gained 10,000% in my uranium stock that I bought 2 days ago? So they are starting to throw in the towel. And that's beautiful for us. That is amazing, because that gives us the buying opportunity. Because fundamentally, nothing has changed. Now, the question is, what are the triggers? Well, I'm not going to lie to you. There are really not going to be many triggers this summer. The summer is usually a dead period. Things start to get interesting in September when the big nuclear conference is happening in London. So usually before that, the uranium stocks start to move a little bit and become alive with the possibility of deals being made at that conference. I'll be in London during that time. But The summer itself, we cannot expect much. The real news driver is the SMR technology. Because that is a technology that has retail and institutions really excited. And we saw it when the SMR stocks were hot with Oklo. So I believe that is the driver for the new uranium bull market that's to come. But then you'll say, well, but the SMR, they don't even have prototypes. They're years out. Well, we don't need them in production, right? What we need is news out of the SMR sector that the prototypes are coming. They're going to test them out. They're going to be government support for them. And then the fantasy perception of what could be possible start to get into the heads of the investors. The euphoria comes back. And that will be the catalyst. So right now, where we are right now, this is not the time for, I'm going to buy uranium stocks and they're going to go tomorrow. No. Right now is a period where we sit back patiently and we wait for the prices to come to us to buy low. This is the buy low phase. And then when you are in the buy low phase afterwards, what happens most of the time is you're going to have to sit back and you have to wait patiently. A lot of times, this is the truth that nobody tells you, but it is that way. You buy low, the stocks go even lower. That happens all the time. You rarely hit the bottom, especially with mining stocks. As I said before, it's this old saying, if you're not willing to deal with a situation where you buy a mining stock and the next day you're down 20 to 30%, buy an ETF or buy more of a bigger blue chip mining company where that is rarely the case. But this is the reality in the highly volatile mining stocks. So then if you like the story in uranium, which I do, I'm a huge uranium bull. If you like the mining company, which I love, the mining companies that I'm invested in, that I'm looking to buy or add, you buy even more. And then you wait until the triggers come, until the retail euphoria comes back, until all of a sudden the hedge funds are, there's money to be made in the uranium. It's back alive. Let's get into it. That will happen, but it might be happening in the future. We need to be patient with the uranium story. I know when you get in on a euphoric rally phase in uranium, things go super crazy and they go supernova in no time. But as you will see on Saturday, I think we're going to do it on Saturday. Let's say this weekend. The new VIP newsletter video, you will see that is not how the uranium stocks usually move. We need to be patient. That is the price we need to pay for the big upside, but then we get rewarded very well. Now, let's finish up with the uranium stock. So what does the URA look like? Well, we're below the 200. That's not great. We're well below the 50, obviously, the purple line. This support zone that I have been drawing out, I've been telling you for a month, has turned out to be absolutely accurate. So that's great for us. We hit it to the penny, bounced off it. Now some probably short coverings and gains altogether. Oversold slightly, but we're still below the 200. And we still have, and let me zoom in here for you, a major gap open right here. So if the URA bounces off the 200, I'm not even talking about this monster gap. We're definitely going to close this gap then. But I can see the URA going all the way down to the lower end of the support zone, which would mean around a 20, 25%. Yeah, about 20%, a little more. Let's say 22. 22% decline in the ETF. That's steep. But again, we're in this for exactly that. We want that, right? We want that because right now, again, this is the buying opportunity phase in the uranium market. So why do I think this? Well, because again, this summer period usually pretty boring fundamentally. I don't see where any major news is going to come from unless one of the SMR companies publishes something out of the blue that nobody is aware of, or there's a crazy Trump tweet that he is going to support the SMR companies, but there's no reason for him to do this right now. So there's no fundamental factors coming in. It's going to be all the charts. And again, if we doink off the 200 and go lower, we'll probably make a lower low. And once we break this upper end of the resistance zone, which held here, 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 all in 2025. Very important, right? Once we sell it, we're going to go at least to the middle of it, but likely doing the gap fill. Now, let's talk about one of my favorite uranium stocks. If you follow this channel for a while, you're familiar with it. If not, again, hit the subscribe button, and that is Energy Fuels. Now, I have other favorites when it comes to the nuclear energy sector. But if we're talking about nuclear uranium miners, this is one of my favorites. There are other ones, Denison Mines, for example. Wild chart, not a great chart, which if we want to buy, love to hear. So we're making lower highs, but this small support zone that you see right here has held. That is impressive. We're fighting with the uptrend. We're way below the 200, like most uranium companies. We're way below the 50, obviously, which is trending down, showing weakness. We're working off this oversold situation, which would mean if we doink off the 200, if we even get up there, but there's a gap fill right here that we could see being closed. If we go lower, and if we break this support zone, we're definitely going to get a flash sell. And if you look at the chart, you see that, man, this chart has more holes than a Swiss cheese. Gap right here, gap right here, gap right here. So there are plenty of gaps right in this major support zone. And I'm zooming out for you to get a feel how big and how important this big blue support zone is. As you can see, this goes all the way back to 2021. So that would mean if the scenario plays out that the URA is going to go down, because who's going to buy uranium stocks if there are no fundamental news and the stock is going to go down, especially if we get an overall market correction in the coming month? I can see us go down all the way to the lower end of the support zone. And then we're talking about prices of around $9.50 to maybe with an undercut, $8.40. So let's make it easy and say $9. That could be in the cards. And that would give us a really interesting buying opportunity on one of the junior producers, uranium junior producers. This is a completely different level than what a lot of the explorers are. This is a junior producer made in America, as you know, plus rare earth. So That is it for today. Have a great day. We see us tomorrow, first edition of Hot Dividend Winners. I hope you'll tune in. Have a great day. Bye-bye. One more time, let's go Knicks.